Okay, hello guys, it's Anthony here on the desk at Amplify in London. Just wanted to quickly jump on. It's just coming up to 6:30 here in the evening on Tuesday the 28th, and we've just had a really big piece of volatility go through in the British pound, cable in particular, and I'm just going to show you the chart and explain some of the reasons why we've just had this. And it's all to do with some breaking news with Brexit. Basically, there's been a snap piece of information that's come out regarding the size of the divorce bill that Britain are willing to pay Europe in order to secure a transitional deal. What we've had here is the actual piece of news, and what it looked like was this. It came from Twitter. It didn't come from a traditional news outlet like Bloomberg or Reuters. And hats off to the guys at Randsquawk. They caught this bang on when it came out on Twitter to the second. Perfect time arbitrage to get into that trade where it initially came out, which to the minute was just after 7:42 London time. Heavily then some of the traders here long in the sterling currency for likes of Safe, who was still here in the office at that time. And the reason why was the headline here was that Britain and the EU agree a divorce bill. The details, which was the most important thing, was that sources on both sides have confirmed that the agreement in principle has now reached over the EU demands for a 60 billion financial settlement ahead of the crucial launch of next Monday. So if you remember, the timeline here of Theresa May is that she, according to the sources last week, was going to up the existing 20 billion to 40 billion by next Monday the 4th of December, and so that in order to facilitate time to discuss then for the transitional deal to be secured by mid-December. 40 billion is the number priced into the market and the pound. Now this report would suggest we're looking at 60 plus. Completely unexpected, and as such we've rocketed higher here in the sterling currency. It took a little bit of time for it to build up, and it was a perfect entry trade opportunity. You just needed to hold it. Couple things here to keep in mind, and the reason why it took a little while to build up was time of day is critical. This headline came at gone 5:30 in London, so most UK and European participants have gone home. It's mainly Americans in the market, and maybe they're not quite as attuned to the nuances of the story and the levels of negotiations at the moment. Also, the fact that the news came from Twitter first, then it gets run approximately 30 seconds to a minute later by the likes of Bloomberg, Reuters. Everyone else in the investment community sees it, and everyone else joins the trend. And actually, if you look, 1 minute, 2, 3, 4, 5 minutes consecutive of green strong candle bars to the upside. At this point, Safe was already in the trade, kept it, scaled out of some of the positions on the daily pivot levels at S2 and then S1, which was the 133 handle. I was pretty strong though of the opinion of telling him at the time that 60 billion is way bigger than anyone's been anticipating. And I told him my suggestion would be to keep hold, be patient, scale out, book some of the trade, but keep some on with some size in order to see out pivot, because I think definitely this is a real game changer as far as Europe would, I imagine, bite off Britain's arm for 60 billion if that were the case. We then got to pivot exactly on a test, failed to test. 2 times, 3 times, 4 times, we break an immediate run up to R1. Then this second big price activity occurred, which was this, and this is quite typical. This is when, at this point, Safe is out of the trade. And what's key here is that when we're looking at this downward move, very aggressive, actually more aggressive than the first headline, this is what you need to be careful of. Telegraph are reporting sources, so this isn't official news. And I was explaining to some of the trainees that were here, they were saying, how would this work in reality? And having dealt with newsrooms myself before and journalists, if I worked at the Times and the Telegraph have just broken this story, my boss would be breathing down my neck going, why have you not broken this scoop yourself? Get onto your contacts in Brussels and find out whether this is true or not. They've hit the phones, they've talked to their contacts, and they've basically come out. The next headline that we saw then, just moments later, which caused the sharp reversal, was this. A British government official says does not recognise the Telegraph newspaper's account of Brexit negotiations. What happened? Looking back on a minute chart in sterling, an immediate fall of well over 100 pips within approximately 10 seconds. So definitely a good strategy, scaling out of that trade, and then a little bit of protection in regards to not holding on to, again, scaling, booking the move as we went higher, out of the trade at R1, and then with the propensity that the story can fluctuate given that sources need to be ratified, and in this case they said the opposite. So that was the sterling trade, and then actually we've had a real flurry of activity actually on the news feeds. First of all, quick look at gold. This is the gold chart, and you can see here it's this move that I'm looking at. We just saw a spike of well over $3 in gold and had a test on 1300. Now this is the headline that's just come out. Now people have talked about this quite a lot. You'll have to excuse the graphic there that someone's added to this Twitter feed, if you like, but this is the main headline that came from Zero Hedge, and this looks like a major newswire headline. Yonhap obviously is the major Korean news agency, and they've said, in Japan, North Korea fires the ballistic missile. So North Korea have gone ahead. There's been a lot of speculation the last 2 days they were going to do this. What was the reaction? An immediate flight to quality bid in gold. We spiked up, and as per that headline from Zero Hedge, the latest I'm hearing on this is that the Japanese Coast Guard has now said the missile has fallen in sea near Japan. So at the moment, the market is fairly sanguine about missile tests from North Korea. The question is, where does the missile land, and does it indeed hit any landfall? Sorry, just turning the lights back on because I'm here, just a few of us are left now on the trading floor. So the move has tempered, and actually it looks like the same repeat situation has happened in that the missile has landed in the sea and not actually hit Japanese territory, which is key. And then the final piece of information that I just wanted to say, this hasn't actually moved the market, but Thursday is a really critical and key OPEC meeting. And will they or won't they extend the existing operational deal of production cuts of OPEC and non-OPEC until the end of 2018? And we've just had a flurry of some comments as well out of OPEC. I'm just seeing if I can scan and find them. Output caps for Libya and Nigeria could be discussed at the meeting. So if you think about it, all we're talking about at the moment is an extension of the deal. No one's really talked about capping Libya and Nigeria. Libya's production is up year to date approximately 20%. Nigeria is up around 20%. Libya is up approximately in excess of 60%. So bringing them in with quotas in order to, let's say, cap them in order to make then the overall production cut more effective would definitely be an escalation beyond just a deal extension. So more things coming out with OPEC. And then finally, what I am looking at right now is Bitcoin. We're getting awfully close now. We're within about 12 bucks of 10,000, and I don't know, I think we definitely could hit 10,000 any moment. And when we break 10,000, probably the initial reaction is going to be either one of two things. We either hit 10 and we see a significant reversal, as we often do when big round figures and barriers are hit to the upside. Hit 10, potential profit taking then, and we move back down to those previous lows that were seen down at 98.40, maybe even as fact as a bigger reversal down to the 9800 handle. Or we do the opposite. People take 10,000 breach as a clear sign. We see an extension and pop in prices, and we go from 10 to 11 and beyond within extremely short time frames. Some of the interesting graphics which I saw this morning were circulating, but definitely looking at the speed of now 1,000 increment levels in Bitcoin are getting ever more shorter, and I think we could go from 10 to 11 within a matter of days, if not quicker. Okay guys, going to leave it at that. Just wanted to jump on and cover this British pound move more than anything, because I would say this is probably one of the best trading opportunities that we've had from an intraday perspective. Absolutely perfect time arbitrage to get into that trade, as did some of the guys here, executing that long, scaling out at levels, holding on to some, and then the eventual exit at pivot, not getting greedy, managing to encapsulate a good 100 pips banked. We did extend on that, but then the rebuttal came. That was always the risk, and now out of that trade. All right, guys, have a good evening. See you in the morning.